LiteFinance, the world of financial freedom.
Hello, it's Monday, so let's start the market forecast. As always, let's discuss what we can expect during this week in terms of macro events and macro calendar and from a technical point of view. Today is a Martin Luther King Jr. Day in the US, so the second part of the day should bring us lower volatility on the market. Apart from that, as always, Monday is a bit slow start into the trading week. We just received very poor data about the GDP from China, which fell for record low levels. We can clearly see that the country's economy is not doing very good after the government crackdown on big companies, i.e. the new regulations. But this mainly concerns those who invest in Chinese stocks, which is a topic we are not talking about here in those videos. So moving on, during the night from Monday to Tuesday, we will get the Bank of Japan rate decision along with the monetary policy statement, press conference and outlook report. Where, as for the rate decision, we shouldn't receive any surprise, but policy statement might be interesting since we receive many hawkish comments from the Fed and rate changes in countries such as UK. Therefore, we might get some clues as for the future central bank moves. Later on Tuesday, average earnings and claimant count change from the UK and ZEW economic sentiment from Germany. On Wednesday, inflation data from the UK and Canada. On Thursday, on the other hand, employment change in Australia, inflation data from Eurozone, later data from the US on initial jobless claims, Philly Fed manufacturing index, existing home sales and crude oil inventories. On Friday, retail sales from the UK and Canada. The long-term trend remains downward. The members of the regulator's board of governors are almost unanimous in saying that investors should expect 3 to 4 interest rate hikes in 2022. We are talking about the dollar, of course. The first of them may take place in March after completing the emergency stimulus program. Meanwhile, the single European currency reacts to the statements of the president of the European Central Bank, Christine Lagarde. She reiterated that inflation is expected to fall in the EU at the end of the year, adding that the central bank is ready to take any measures to achieve the 2% target in the medium term. The officials also approved the current accommodative monetary policy needed for this. So the US dollar rose unexpectedly on Friday, although almost all macroeconomic data were very weak. The core retail sales index for December fell by 2.3% after rising by 0.1 a month earlier, while retail sales fell by 1.8% after increasing by 0.2 for November. It is also surprising that the decrease in these indicators occurred during the Christmas sales when historically they always grow. Probably investors considered that the negative dynamics were included in the price earlier and did not sell the US dollar. As for the British pound, the high wage growth could signal for us that inflation will be more persistent and therefore force the central bank to set the pace for rate hikes even quicker than initially planned. Let's talk about some technical stuff right now. BTC at the moment bounced off the level of 40k, which means it corrected all the previous upside move. We are below 61.8 Fibo and I would still wait for the levels from the previous wave until we reach 78 and 88.6 Fibo level, which are around 37k and 33k. Euro pound bounced almost from 127.2 Fibo level and created a sort of a reverse head and shoulders pattern on daily time frame, which is a bullish signal right now. GDP USD also bounced off 88.6, crossed the 78.6, and we might see a bearish harmonic pattern. First target would be at 61.8 Fibo and then 50. Okay, that would be all from my side for today. Thanks for watching and I'll see you in the next week. Take care, bye.